Hello guys, and welcome to the 48th editions of the Trading Opportunities webinar. This is Nirav, and I'm just running a quick mic test right now. I'll wait 1 second. I'll wait for the comments. What do you say? Live chat to see if the audio and video is visible. And let me check some things here. My end. All right, so it's working at my end. Since I was a little bit late, so I'll try to do things a little bit faster today. Hello, Steve. Thank you for the confirmation. How are you doing today? And what about the other people who are joining in the chat live on this 40th trading webinar? 40 is quite an achievement. In my personal opinion, we have been able to do 3 webinars per week for a good amount of time. Disclaimer. Here it is. Okay, so I won't be taking much time in introduction today. So here is a quick disclaimer on screen suggesting that all content presented here is purely for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading or investing, then you yourselves will be liable for your profit, your loss, or loss of profit. With that out of the way, let's see a little bit about my work. Hello, Antoine. Good of you to join early today. Okay, cost accuracy and everything. Just give me a few seconds while I load up the pages for the about us part, and we will then quickly proceed to the actual content. Okay, so here is a quick introduction. My name is Nirav Yadav. I am the admin and owner of the website 50 Eyes Market Analysis, where I've been presenting my views on global markets, including but not limited to Forex, commodities, indices, cryptos, etc., for 7 or I think 8+ years now, right? And this particular broadcast is the 40th in the series of the Trading Opportunities webinars, right? We conduct 3 of these every week: Monday, Wednesday, and Friday at 2 PM GMT. So if you are watching it later on as a recording and wondering how to join in, this is the timing and this is the place. 50 Eyes Market Analysis YouTube channel, right? Other than this, I am also the author of the book Think with the Markets: Secrets to Achieve 80% plus accuracy using Elliott Waves, and the video course, which is again based on Elliott Wave. You can check it in my website going to the courses section, Elliott Wave video course, and I also run a training program called Training Program LT, generic kind of name, right? And lastly, before we move with the actual webinar, here is the track record of my work for the last 6+ years. So generally, the accuracy of forecasts and analysis in this business is 60% plus, which is considered very high. I'm talking about the overall idea we have of this business, and I have an accuracy of 80% plus for consecutively 6 years, right? You can check, or anyone can check, by visiting my website 50eyes.com/forecast-accuracy, and just check these Google spreadsheets. These are the dates, these are the instruments discussed, the analysis, and what happened. You can check that in the video and what happened later on, right? So 2021 82.22, 2020 88.5, to 2019 84.88, 2018 84.61, 17 87.5, and 16 83.34. So you get the idea. And with that out of the way, let's head over and start the webinar. Just one quick thing here. the way we will proceed with the webinar is we will go over the charts of the Forex pairs first, followed by the commodities, then followed by the indices, and at the end, Bitcoin. Right. So this will be our progression. Euro USD, EURCAD, USDJPY, EURJPY, crude, gold, S&P, Nifty, and Bitcoin. Every time I complete a discussion, I will ask if you guys are clear. Please do let me know in the live chat. And if not, you can post the questions. Again, keep in mind the questions and the clarifications asked are for only the live chat. I'm not going to answer any questions posted afterwards. Right. So let's keep that in mind. If you have questions, you can attend the next webinar, sorry, and ask the questions. So here's the chart of Euro USD. One more confirmation, if somebody can give in the comment section, that would be nice, but I will proceed anyways. So on this chart of Euro USD, you can see that last time we were running the analysis, we were thinking that it might be proceeding downwards as a zigzag. So a zigzag progression would require A down, B up, and C down. The first leg down, this one is called an A. This one is called the B, and the next leg down, which should be the last, is called the C. Now in this particular progression, we already have the A marked, we already have the B marked, and the C can be here, right? Why am I saying can be? Because generally, if the C is complete, we would like to see the market giving us some sort of confirmation. Confirmation can be many things. It could be the break of a trend line, a sharp move in the upward direction, or a break of an important resistance level. Right, in this particular case, the resistance level is placed a little bit higher than our current market level, which generally is the case with zigzags. It's around 1.07897, and it has not yet been taken. Neither has the trend line, which is drawn from 0 to B, been taken. So what I'm saying is that this trend line is not yet taken out. So we do not really have a confirmation as such, right? And aggressive approach would be to go long as soon as we see a clear movement or close, more particularly close, not a clear movement, close above this trend line, right? So once we see that, we can look to enter longs, but as I said, those will be aggressive longs. The stop losses would be below the or near the last low, which is currently around 1.06123. On this particular data feed, keep in mind your data feed may be different, leading to a different price. So that's the setup, right? And the next thing would be that if this stop loss is triggered or the lower alert is triggered, then it is possible that the C is not complete here, but still continuing to the downside. So just keep that in mind. The scenario that C might be complete, continuing to the downside. If complete, we already know the setup. Okay. So that's about it for Euro USD. Please do let me know if you have any particular questions. I'm just now going to load the chart of EURCAD, and I'll be going a little bit faster today. Okay, so EURCAD, as we know already, we have a trade running on this counter. The trade is a long trade, and the bias is that this market from this point of reference, which is around the price level of 1.45909, has completed A down, B up, and C down progression. Right? US markets are closed today, so more free time. Yes, true. So what I'm really saying over here is that we have the A down, B up, and C down progression here. So based on that, I have initiated some long trades. They have not really given us much of a profit, neither have they shown us any loss so far, right? And the bias is that if this count is correct, then we will see a possible upward movement, which should take us higher than the wave B high, right? So if that is the case, then of course the market should go higher. That's the bias for taking longs, right? And the next thing we need to discuss is the invalidation level of discount. So technically it's below the wave C low, but I have moved an alert around 1.43. The reason is that if it goes below this, then I will reevaluate the situation and probably take off the long position, probably based on the price action. That will depend. So that's the level I would like to look at this market again with some seriousness. 1.43. Right. So that's about for our discussion on EURCAD. And what is it with the chat here? I'm not seeing much participation. Okay, so there it was. Okay, I didn't see the comment there. Sorry about that. So EURCAD, thank you, Steve, for the confirmations. And what is it? Next chart is USDJPY, which, by the way, guys, is still a little bit unclear to me, but we'll have a quick look at it. So here is a chart of US dollar, Japanese yen. right? Last time, as I said, it was a little bit unclear, and it still is. So I have a little bit of a small update here. From this point of reference, we may be seeing at a correction proceeding in the upward direction, with the progression being a W up and X down and then a possible Y up, right? So that is a possible progression that this market might be doing once it is complete. This may, once again. Okay, yeah, so the Y up may not have been completed. That's my current count. The W up, X down, and I'm thinking that the Y up is still progressing. So once this Y up is complete, we may see some sell off, right? So as I said, this is a complex looking structure and a lot of things are possible. So I'm just giving you a quick outlook. I'm not suggesting a clear or a perfect or proper count. This will probably require some updates later on. Right. So based on this, as I was saying, we will look for some shorting opportunities once this Y is complete, right? And basically that's what we are gonna do. And as far as the price levels and everything else is concerned, we are looking for one leg up. So we will be interested in it once this takes out the last known high, which is around 135.10 something level. So I'll just quickly place an alert near the high. In case it's taken out, I will look for the mentioned reversal, right? So I'm not going to discuss the whole count in detail here because I believe this will require some updates in the near future. So we'll leave it for the upcoming webinars, right, guys? So do let me know if there's any particular questions. And I'm quickly going to load up the chart of EURJPY, which has more clarity compared to this particular one. So EURJPY, we also were discussing this in the last webinar, and we were thinking that this market might be giving us a possible long trading opportunity in the short run, although our overall bias or the swing perspective is bearish, right? So far, at least. So what we were thinking is that if this is a wave one up, by the way, let me just quickly clarify for those of you who may not be very much familiar with Elliott Wave. Our bias here is that we think that this market is going up for a wave one up, followed by a correction. In this particular case, it looks like a flat. Should be following next leg up for 3, then a correction for 4, and then the last leg up for 5. So based on this bias, we have already counted this leg up as wave 1, right? And we are thinking or of the view that this is probably the wave 2. And it looks like we are now proceeding up for the wave 3. So if that is the case, then we should be looking for possible long trading opportunities, and that is why you can see I have an alert placed near the highs. So long story short is, short term wise, I'm looking for longs. I'm looking for longs near the highs or at the break of highs. So it's a breakout setup or a momentum trade setup, basically, right? So with that clear, let's just quickly check out what these price levels are that we are talking about. So the price levels near the high are currently at 143.633. So above that, expect longs. I'm expecting longs. And when are we wrong? Currently, we do not have what do you call invalidation level per se. So in this particular case, we will wait and watch. And I would like to take a note of the bearish moment only if it goes below 142, 142-ish levels, right? Or around 142.50, 142 levels. So that's why I have an alert on the downside for that. Nothing much to discuss. Chart that is definitely supposed to be kept in the watch list because we might be forming a possible long setup here. So do take note of that. And again, I'd like to request some messages or confirmation in the chats, right? Generally, it is quite active, but today I'm seeing less participation. Thank you, Steve. So let's head over to our next chart of crude oil. So crude oil does not seem to be having any new updates. It is basically the same as we discussed the last time. I'll just quickly summarize it without taking much time. So we are expecting bearish movement. Our bias is that it might be forming a complex structure or it might even be forming a triangle. As you can see with these trend lines which I've just drawn, they seem to be suggesting that a triangle is possible because this upper trend line has offered resistance thus far, right? So in case it is a triangle, then we would like to see a move below the wave D low, because in that case it will be the wave up, A up, B down, C up, D down, and E low. Sorry, E high would be here. So D low should be taken out, which is currently for this particular data feed coming around 72.20 ish level. So around 72.20 level, the D is there. So below it, we can say that a triangle pattern is complete and look for short setups, right? So that's one way of looking at the structure. Secondly, I also mentioned that it might be forming something complex, in which case we will be interested in taking the long trades, which, as we already know, are placed near the higher end. So above 80.80, we will be interested in possible longs, right? Because at that point we probably are seeing something other than a triangle, right? So one pattern invalidates, or what do you call it, failure of a good looking pattern can be taken as the sign of entry in the opposite direction, right? You can take it as a concept, or just keep in mind, because I sort of use it as a concept from time to time. So that's our bias for WTI's crude oil. I do not think there is anything specific here, unless you guys have any questions. Let me see. Crude oil still tricky and sideways, quite difficult to trade. For the instance, in my opinion, is the comment from Antoine. Yes, Antoine, I definitely agree with you on that. So anybody else, if they have any doubts, or okay, Steve is saying all good. So with that, let's head over to our next discussion, which is gold, and which is possibly forming a trade here. I am currently holding some longs on gold, right? And setup is, let me show you guys. So as I said, I am currently holding some long positions on this counter of gold XAUUSD. And the setup is what we discussed the last time. So if you were following me or are following me, then you should have been able to spot it already, because we discussed it the last time itself, right? So from this point of reference, around the price level of, what is this, 1960. So from 1960 onwards, we seem to be having a possible zigzag pattern, and the zigzag is characterized by three legs down. The first leg is called an A, up is B, and down is C. And we then draw this trend line here. So it is already passed or crossed, whatever you would like to say. And since it is crossed, we have one assumption suggesting that the correction is already complete here. Again, do keep in mind, this is just one of the possible assumptions that this movement has completed here, right? The other assumptions would mean, or would suggest that it may even be continuing to the downside, right? How would that be possible? Well, there are many ways it could continue to the downside in the form of a double zigzag. So if this is a single zigzag, then a double zigzag will again have three more waves downwards. Again, an A down, a B up, and C down, if I may. So again, an A down, B up, and C down, and joined by a connector X. So as I said, that is also another possibility. So with that in mind, let's look at the chart again. So as I was saying, because there is another possibility, again, I have not taken a full size long position. My positions are not that huge, to be specific. So I'm still waiting for some sort of more clarity or confirmation for adding more longs. It seems like the video is still loading. Hopefully I'm still connected. If someone can comment in the comment section and tell me if the data feed is still working here at your end, that will be nice, because at my end it seems to be probably not. So Steve and Anton, can you still hear and see the live stream here? Okay, so let's head over and continue our discussion here on gold spot. It looks like the stream is just going on with lower quality here. So what I was saying was that you do not have the proper confirmation for longs, so that's why my entries are only partial and small, right? And I'll look to add on if we see some sort of more bullish movement. In this particular case, one of the signs of strength will be a move above 1866 levels, which is also the most important resistance level. So if the price establishes above it, we do have resistance zones here. So, and 1866 level is sort of in the middle of both these zones. So that's why I'm saying 1866 is a sort of level we would like to see some establishment of the price action above it. Internet working but did pause, Steve is saying. Okay, that's good. So we are still on and live. So as I was saying, keep in mind or keep yourselves aware of this level 1866 for the upside, right? And on the downside, we do have a clear setup. On the downside, if the market does take out the low, then we definitely are looking for selling it, because as I said, we have the progression of a double zigzag and there are some other possibilities. Doesn't really matter at this point, right? So downside, we have a clear analysis and a clear trade setup. Upside, we are not that clear, so I have added partial longs for upside partial. So that's our outlook on gold. Let me know, guys, if you have any particular questions about it, right? I'll wait for a few moments in the comment section before we head over to S&P and quickly have a look at it, see what happened on Friday. Did that add anything new or any new perspective compared to what we discussed already? Although, case, one second. Okay, so here is the chart of S&P's 500. Right, so we discussed it on Monday, of course, and there is a new kind of updated count, let's just say, which we have here on screen. So the view I'm now taking is that from this point of reference, we seem to be have covering or completed a wave A, and this may very well be the B, right? And I'm thinking that this market may be giving us a running flat for the wave B. So let me just quickly explain what I mean by a running flat. Okay, thank you for the confirmation, Steve. And it looks like the audio and video is delayed by what do you call the internet latency. And I also seem to have missed another comment. So let me just quickly check that before I head over to S&P 500. It's Meher is asking, do you never use indicator? Thanks. Yes, it's Meher. I do not ever use any indicators. Solely use price action. Okay. And most people who do trade discretionarily do not use indicators. Okay, anyways, I'm not interested in discussions like these, so I hopefully have answered your question. Let's head over to now the chart of S&P and look at it in a little bit of details. A little bit of detail. There are no tails in detail. Anyway, so here's the wave A up we are talking about, and as I said, we are expecting a wave B. And as I said, I am expecting that there might be a running flat here, and the reason is that this particular price looks like it is forming a flat. Now, the only way it can form a flat is if it is forming a WXY or a double or triple zigzag, to be more specific. So I will now explain what I mean by the flat structure for those of you who are not familiar with the concepts of Elliott Wave. So in the particular discussion here, this is the point of reference around the price level of 4142. So if you look at this bottom area, a running flat would look something like this. So it will start from this 4142 level, go down, and the market will take out the high, and then it will go down again. So inverted or mirror and kind of a situation, right? So in this particular case, it has already taken out the high, as you can see, but because of this particular price action, I believe it may take the high out once more and then reverse and then go up again, right? So that's just the assumption we have right now. And let's look at some specific levels. So specific levels I'm currently looking at is the distance starts around 40 to 30, goes to as high as 43.75. But I particularly think that between somewhere in 40 to 30 and 40 to 70, sorry, 40 to 85, somewhere between 40 to 30 and 40 to 85. Just repeating myself for the sake of clarity, we can see some reversal, right? And that will be again based on this pattern running flat. So multiple ways to trade it. Simplest way is to try and trade this leg up, right? And for that, I have placed an alert around 4118 ish level. So if the market goes above 4118, then I'll be interested in looking for longs. As such, aggressively speaking, if you want, you can just trade the long above 4118. I just like to analyze the price action and then take the trades instead of getting or jumping the gun. Right. So that's our quick outlook on gold. Here's the proper analysis with every count and trend lines and whatnot. So if you want to have a look, that's there. Right. Let me know, guys, if there's any specific question, because this count may be a little bit overwhelming for some people. If you have any doubts, you can let me know. Otherwise, we'll move over to our last two charts, which will be Nifty followed by Bitcoin. Again, in Bitcoin, we again have a trade that worked out for us. So we will have a look at that very soon. And as I said earlier, also, I am experiencing some delay in the, or the proper word is latency here. So maybe when I say please do type in the comment section, you guys are hearing it late. Right. So I'll take a few moments here and request those of you who are watching this live and those of you who are watching this later on as a recording to kindly hit the like button on the respective platforms you are on, as well as subscribe if you haven't already. Right. And we do this 3 times every week on Monday, Wednesday, Friday at 2 p.m. GMT. So if you want to join in live the next time, please do so. Lastly, if you do like the content, definitely make sure to share it, because we still are not at the point where we would get 400, 500 views per webinar. And we are already nearing the 50th webinar, because this is the 40th in this series. So as I've said earlier to you guys, that around 50 each level, I will decide what's the direction to take, how to continue this, or to reduce the number of these webinars. So if you are liking this content and want me to continue with more of this, then as I said, we need more participation, and I will request that you share the content. So thank you for the confirmation, S&P Steve. Let's head over to the next chart, which is Nifty 50. So in Nifty, I said last time that situation was not the clearest. It could be counted as a correction heading in the downward direction, or it could also be counted as a correction which is or a pullback in the downward direction, right? So again, we still don't have extreme clarity on it, but I would like to give a little bit of information, or the amount of information that I've been able to see on this chart right now. So from this point of reference, around 17353, this can be counted in multiple ways. I currently have 3 various analysis running for this particular chart, and I think that yeah, 2 were bullish, 1 was bearish, right? So the bearish count suggests that below 17761, we can say that the bearish activity has increased, and we will look for or would be interested in sell off. So this is the important level below 17760. Okay. So let me just type it or write it down. Let's just say. So below this level, we will be interested in sell offs, right? As far as the bullish counts are concerned, we can look for bullish activity or possible longs above the break of this trend line, because this can be counted in, as I said, multiple ways, but this particular structure suggests a possible activity as a WXY correction, and in which case the confirmation generally will be taken around the break of 18,000 level. But I personally would like to take longs above the trend line if the market establishes itself above it. Keep in mind, movement above the trend line means the market goes above it and then at least gives a close above it. Most favorable scenario is testing the trend line. A candle above the trend line like this, and then one testing the trend line, let's say like this, right? So hopefully you get the idea. If there's any doubt, do let me know. Again, I'll just quickly summarize this. The idea is that we are looking for longs only above the trend line and shorts below 17760 level, right? And as I said, counts multiple ones are possible here, and the one I have right now is this. that we have a possible wave, one up, two down, and then again one up and two down progression. So a nested impulse in play. So dot one, dot two should be followed by dot three. So if we are able to, if this count is correct and we are able to catch the longs, then it might lead to some good or big move. If not, you already know the downside setup. Let me know, guys, if there's any doubt, and I'll just like to move to the last chart, which is of BTC Bitcoin, and which I said has worked out precisely as we discussed, which takes our tally of counts or analysis that played out in live market to 44 in the last 39 webinars, which is a pretty good number, I believe. Okay, so let's head over to the chart here. BTC. Last time when we discussed BTC, we were of the view that this market is heading higher for the wave fifth, right? We were, by the way, already able to capture this movement. If you are following me from the last few webinars, we already knew the reversal levels were around 22,030, and then the next one was 2945, and it reversed from between these two levels, and we were, as I said, already able to capture it. The last discussion was that if you are long, just keep trailing your positions, and if you have been trailing your positions, they have been, I believe, given the fact that we already discussed the entries, I believe they must have been doing good. So again, no new update here. Still keep trailing your positions as long as a wave 5 is in play. How long will the wave 5 go on for? Well, we'll just trail and watch, because it has already taken out, not taken out, it has almost touched our minimum target, which was around 25,340. It has given a high around 25,290 something. So almost touched our immediate level. So if you really are interested in level, the next one will be this red trend line. So anything around 27,000 or higher. So let's just say next target, if this market is really bullish, is 27,000. So keep trailing existing longs, no new entries we are suggesting. If you missed this one, you need to attend these webinars when I conduct them live every week, Monday, Wednesday, and Friday at 2 p.m. GMT, of course. So that was our quick discussion on these markets. I hope you guys enjoyed the content. And as I always like to do, kindly do make sure that you have shared this content with your friends, colleagues, or people who are into trading. If you are part of some Slack, WhatsApp, or Discord channels where traders talk, then make sure you share the word and we see more participations, because as I've said so many times, our participation still hasn't crossed 400, 500 views per webinar, right? So we definitely need to share the content. And I seem to have gotten a question: is it possible that do I have a account in 1 hour time frame? So do I have an account? Let me see. On 1 hour time frame, we have to check it. Let's see. First of all, let me check the relationship between the 2, 3, 4. So see, it is possible that the 4 is continuing, but I do not think that is the best case scenario. So we will now put an assumption that the wave 4 is most likely complete. Going ahead with that assumption, we can then, let's see. Okay, so the most clear count I can see here is that the 3 is complete, the 4 is in play, and the 5th will be there, right? 4 is again elongated a little bit more than what we would like to see. So it's still heading higher for the 5th. It's a intraday short-term long opportunity here, by the way, right? As far as the 4 is concerned, it could have almost completed here, or it is probably continuing as a complex, perhaps even as a triangle. So that's the play here. A short-term long opportunity is visible here. As far as the targets for this short-term longs are considered, we can take the CN channels. Actually, it will be very huge move. So immediate target, I'll just say, is above the last high. So it should cross 25 to 90. So that's our quick look at the 1 chart as requested by Antoine. So let me know, guys, if there's anything else, or we will just conclude the webinar at this point. Again, thanks for joining in. Steve is saying, thank you, Nirav. Appreciate your work. You're welcome, Steve. Make sure you share it with 3-4 of your colleagues or groups. And thank you, everybody else who joined in. It looked like the participation was very low, but then again, cannot blame you guys. It was a holiday at your end for some people, of course. So hopefully we'll see more participation, or at least the participation we usually get in the next webinar. With that, I'd like to conclude this webinar and talk to you guys soon.